Right. Okay.
My name is Andrew Stotz, and I want to welcome you to another presentation by one of our Valuation Master Class graduates. Ibrahim's here, and he's been preparing and working hard to get this going. Are you ready to go? Okay, hold on. I'm going to leave, and then you just take over. I'm going to leave now, so you can start now.
Right. Here presenting a company full of investment opportunity, Motorola Solution, a leader in the public safety and communication system. Hi, I'm Ibrahim Absalam. I initiate a coverage on MSI with a buy recommendation based on a target price of 505 cents, implying an upside of 12%, 12.6%. I derive my target price valuation using a WACC of 7.3% and a terminal growth rate of 3%. The following are the highlights. Continued growth driven by global demand for public safety and solutions. MSI maintains its competitive position at its maturity phase, rising risk from competition and evolving technology. MSI is faced with the following risk: reliance upon US government contracts and grants, competitive pressure as technology advances, supply chain disruption, cybersecurity threats, uncertainty of proper integration with new acquisition. So now, moving to the background and stories. Okay, background. Who is Motorola Solution? So Motorola Solution Inc. is a leading provider of communication products and services headquartered in Chicago, Illinois. Founded in 1928 as Galvin Manufacturing Corporation by Paul and Joseph Galvin. It became known as Motorola in 1947. The company specializes in public safety communication, offering system devices and software for various sectors, including government and utilities. Following the split in 2011, Motorola Solution focused on mission-critical communication, while Motorola Mobility was spun off by electronics. Today, Motorola Solutions serve over 100,000 customers globally and reported $100 billion in revenue in 2023. So it serves approximately 70% of US public safety agencies. So it has market dominance maintained through continuous operation. So the first story is continued demand for public safety and enterprise solution, which is a good one. So MSI growth continues to be powered by its leadership in public safety and enterprise solution, driven by increasing global investment in security infrastructure, which contributed over 30% of MSI's revenue in 2023. Over the past 5 years, this strategy has supported a strong compound annual growth rate (CAGR) of 6.5%. So I expect revenue to grow by 7% year on year in the discrete period based on the fact that it is in its maturity stage of life cycle. Second, MSI maintains its competitive position at its maturity phase, which is also a good story. It has maintained its market presence in the maturity phase of its life cycle through strategic initiative. It has made over 30 strategic acquisitions in the last 7 years, investing more than $5 billion to enhance its competitive position during its maturity phase. Notable examples include the acquisition of Avigilon in 2018. So I expect MSI to continue expanding its capability through strategic acquisition in order to maintain its competitive position. So rising risk, this is a bad one for it. So rising risk from competition and involving technology, which is the bad story. So Emerging competitors offering cloud-based communication and advanced AI platform are disrupting the traditional hardware dominant market. So with global rise in cyber security concern, MSI slower expansion into cyber security solution compared to peers like Cisco may hinder its ability to fully capitalize on evolving customer need. So the quarterly quarterly report. So for the first quarter of 2024, it saw a slight drop in EBIT margin. So the latest news are the Motorola Solution announced an 11% increase in its quarterly dividend to $1 9 cents per share. This reflects the company's confidence in its cash flow and financial stability while aiming to enhance shareholders' return. Deutsche Bank and Barclays raised their price target for MSI to be $530 and $529 respectively, and this actually backed my valuation, which is also an upside. So looking at the constraint to growth, so I like to consider the major four constraints to growth. The first one is capital. In terms of capital, the constraint to capital is really minor. Why? Because the debt ratio is about 87%, implying that no room for significant debt. Its cash conversion cycle has expanded in 2023 to 44 days compared to 20 days in 2019. So I do not see access to capital as a constraint. So the operation, this poses a major constraint to it because it faces challenges related to global supply chain issues, including delivery delays and labor shortages, which can hinder timely access to essential material. So a material disruption from the supplier may have a material adverse impact on its results of operation. So the market, this poses a neutral constraint. So MSI operates in a highly competitive market that are sensitive to technological advances. So amidst the competitive forces, MSI broadens how it works with customers expanding from its global LMR installed base. People people pose it like a minor constraint to it because the employees are not really much of a constraint to it. So it invests in employee development and training and focuses on high potential talents and a rigorous succession plan development for most critical issues. So it gives a plan for succession of talented employees by more talented ones. So that actually poses a minor constraint. So the revenue structure. So MSI reported total revenues of approximately 10 billion US dollars for the fiscal year 2023, reflecting a 10% increase from the previous year's 9 billion US dollars. The company revenue is divided into two principal segments, that is the products and system integration and software and devices. So within this segment, it has two product lines that also follow its three major technologies, that is the LMR communications, the video, and the command center. So the product and system integration segment accounts for about 63% of the company's total revenue, and the software service accounts for about 37% of the company's total revenue. So looking at this, the product lines that follow each of those segments, we have the LMR communication, which has 75% of the company's total revenue. The video has 17% of the company's total revenue, while the command center has 8%. And the revenue by geography, as you can see, it has its major sales or major revenue derived from the North America, while 30% of its revenue is generated from the internationals, that is other countries. So talking about the FVMR, so we see that it is ranking towards the best. That is, MSI appears attractive relative to 1,810 non-financial companies in US, considering fundamental, valuation, momentum, and risk. So the fundamental, it is ranked in the top 40% in US due to strong profitability, and the valuation in the bottom 40% as it trades on a low PE and PB relative to others. So the momentum, it is ranked in the third decile in the US market, and for the risk, it has a low risk that is due to low beta. So it is low risky investment. So the competitive position, the overview or the overall of everything is that it has a fairly high competitive positioning, and it is based on the put as 5 forces, whereby the rivalry among competitors contributed 40%, and this is due to highly saturated market. That is, there is a lot of there's high pressure of competition because we have a lot of competitors selling the same product in the market, such as the Apple, Samsung, Chinese brands. So the rivalry among competitors has 40%. It is ranked 40%. That is, there is high pressure, there's high rivalry among competitors in the technology market, infotech. So MSI, it's reduce suppliers influence while customer pressure pricing. So the bargaining power of supplier is somehow like it is fairly low, while the bargaining power of customers, it is fairly high. So why? Let's look at this. So the bargaining power of supplier is ranked 67% because MSI sources from numerous global suppliers. So it has that edge over the suppliers, and switching suppliers for key components can be costly. So there is somehow high cost of switching. There is high switching cost somehow. So the bargaining power of supplier accounts for 67%, while the bargaining power of customers accounts for is ranked 40% because the customers have access to alternatives. So that's very, very bad for it. And customers can easily switch brands. So there's low cost of switching in terms of customer, but there's high cost of switching in terms of them switching suppliers. So moving to the next. So restriction on new entrants and defense from substitutes. So we have the threat of new entrants. So it is ranked 73%. That is, there is low threat of new entrants in the market. Why? Because there is high capital requirement. For anybody to enter into the market, it requires high or huge initial outlay, and that's really, really an advantage to Motorola solution. And Motorola benefits from economies of scale due to large production, and the threat of substitutes, that accounts for like 40%, and that's indicating that there is high threat of substitute. So switching costs are low, and the smartphone market is saturated with products offering similar features. So those are what accounted for the 52% in the overall competitive position. So it is fairly it's as I am fairly high in the competition. So moving to the leadership and ownership. So since 2011, when Motorola split into Motorola Solution and Motorola Mobility, the chairman and the CEO has been Gregory Q. Brown, and he has been the chairman and the CEO since then. So the top shareholders, we have the top 5 shareholders ownership, which accounts for 53%, the total institutional ownership 84%, and the estimated free float is about 83%. So looking at the board composition, the number of directors, number of independent directors, and the number of independent directors percentage. So it aligns with the US regulatory the number of independent directors to be in an organization. So looking at the world class benchmarking, we see that it has an excellent profitability and a good growth. And the profitable growth is majorly driven by the profitability, which is driven by the expense control majorly. So the profitable growth consistently ranked in the top 30% among 630 large infotech companies globally until 2022. However, in 2023, the rank rose up to 20% and ranked best in the past 12 months. So profitability has ranked in the top 20% until 2023 when it ranked the best. So it is still the best. So moving to the ESG aspect. So the ESG, so the overall ESG is 87%, whereby the social accounts for 100%, the environmental 100%, and the governance 60%. Let's not delve into them. So the environmental, MSI emphasizes resources reduction. It has policy of reducing greenhouse gas emission and participating in emission reduction program. So the social aspect which also contributes 100% to the overall ESG score. So let's delve into the social as well. So MSI has health and safety policy focusing on employee well-being and also adhere to human rights policies, strong code of conduct, and it employs ISO certified qualified management system. So those are good ones. Then the governance. The board includes a majority of independent directors, and Greg Brown is both the chairman and the CEO, so there is no separation of power in that case. So I think that's what led to the drop in the rank under the governance. So it maintains policy supporting shareholder rights and it publishes annual sustainability ESG report. So it has a good ESG score. Right. So my revenue, due to the stage of the life cycle that MSI is now, it's in its maturity phase. So I made a conservative assumption about the revenue to grow at the rate of 7% in the discrete period. So and the net profit is expected to grow steadily over time as well, but conservatively. So the company is expected to hold sufficient cash, fairly enough cash to finance its operation, and it requires minimal net fixed asset because due to, let's just say, due to low investment in capex. So the long-term debt, I expect the company to pay out or to repay the long-term debt in the discrete period because it has enough cash to finance its operation rather than using debt. So the operating cash flow, um, it has sufficient operating cash flow to finance its investments, to settle its debts, and to pay out as dividend. So it has sufficient operating cash flow. So the cash conversion cycle, due to the good inventory management, it reduces the number of days in which it keeps inventory. So I expect the cash conversion cycle to drop over the period for the company to accumulate cash. All right. So um all right. So the free cash flow, I expect the company to invest minimal in capital expenditure due to the stage of life cycle it is now. It does not require high capex to finance its operation. Rather, it focuses on those activities that generate more revenue than investment. So the relative valuation. So MSI trades at significant premium relative to the infotech sectors in US, Asia, and Japan and the world. So it seems very expensive on a PE basis, trading at PE of 42 times. So I expect 2025 EPS growth to be 8.5%, which is quite lower than others. So significant premium. It trades at significant premium on 2025 estimate PE to EPS multiple compared to EPS, Asia, ex Japan, and the world. So looking at the PB to ROE on the forward 2025 estimate PE multiple, MSI looks expensive. So I forecast an ROE to be around 110% in the 2025 estimate, and it has and as a result, it has a higher premium based on 2025 estimate PB to ROE multiple, which shows that it's slightly overvalued. So looking at the valuation and the target price, so I assume a risk-free rate of 2% and a market equity risk premium of 8% based on the US market. So MSI has been a low beta stock, so I assume a beta of 0.8 times. So I forecast a capital structure with around 22% debt to total capital. This results in a capital of 7.3%. I use a terminal growth rate of 3%. So I did some sensitivity analysis. My base case scenario, which is based on a gross margin of 46%, leading to a valuation price of 506 US dollars. Then I based on optimistic and pessimistic case, I increased it by 2 and reduced it by 2% as well. Then I got a valuation price of 516 US dollars and 496 US dollars respectively. So this is my sensitivity. So moving to the risk, it is faced with majorly four risk. So the first one, the major risk is competition and evolving technology trend. So the first risk is reliance upon US government contracts and grants. So MSI is subject to numerous regulatory requirements, including those related to data privacy, environmental standards, and competition laws, posing a significant risk to operation and revenue. So competitive pressure as technology advances. So MSI faces risk from competitors who may introduce superior or lower cost products, potentially eroding MSI's market share. Supply chain disruption. It is dependent on availability of cost of raw material, components, and labor. Any disruption in this supply chain could lead to delay in the production and increased cost. So cybersecurity, it is faced with that due to the industry it is. Then uncertainty of proper integration with new acquisition. MSI is expected to continue to make strategic acquisition of other companies or businesses that acquisition introduce, and this acquisition may introduce significant risk and uncertainty. So this is also one of the major risks it faces. So in summary, I initiate a coverage on MSI with a buy recommendation based on the target price of 506 US dollars, implying an upside of 12.6%. I derive my target price from a DCF based valuation using a WACC of 7.3% and a terminal growth rate of 3%. So, summary of my recommendation is buy. Then the current price is 449. Then target price 506 US dollars at the target price of 12.6%. And the company is faced majorly with some risk, which is reliance upon the US government. And the major risk is about the pressure of competition and the technology advances. Thank you very much. Thank you for your time. Thank you.
Excellent. Why do you think it's so expensive on a PE basis? I understand your valuation on a free cash flow basis. Is it because of the sector that it's in, or its profitability? You mentioned that it's not necessarily a fast growing company. I'm just curious why you think the PE is so high.
Okay, what I see about the PE is that the company is at its maturity phase and it is already dominated in the market. And based on the historicals, we see that the price has been growing over time. And growing on a PE basis, the price is expected to grow in the future at a particular target price, that is target price of 13%. Then what we are doing is that, okay, on the PE basis, I forecasted a very conservative revenue, which actually impacts the net profit to grow slowly over the discrete period. Then comparing the current price to the future earnings, we see that the company is going to be expensive in terms of PE, because it is already in its maturity phase, and to be characterized by having like a slow or steady revenue, and that will actually affect the earnings at the end. So
Okay.
that's why.
And what about your WACC at 7.3? Could be a little bit low. I'm not sure,
Okay.
but let's say if it goes up a little bit, let's say that we raise the WACC until your target price is about equal to the current price. Would
Yeah.
you no longer be interested in the stock, or you still think that there's a good story there?
It is a good story. It's a good story. Even if it falls below the current price, I would still recommend a buy, because the company really has high potential of growing in the future due to its current strategic acquisition, because it's making some significant acquisition right now, which will actually support its sustainable growth in the future. So irrespective of the quantitative value and based on the ESG and all, and based on the competitive position right now.
All right. Looks like the internet's slow. Hold on. Hopefully he comes back. All right. You hear me?
Yeah, I can hear you. Like,
So
did you hear the last thing I said?
Yeah. How does it feel to graduate from the Valuation Master Class?
Uh, Seriously, it is tough because, and I really learned from the journey because before I started this, I was already building my own model, but my focus was really based on figures. But right now, I know reason why those figures are what they are.
That's a major learning for all students, is the idea of figuring out how to plug in the figures. So unfortunately, our internet may be a little bit bad, so I'm going to end it
You're
here.
just like,
Oop,
yes.
keep going. I wasn't sure if you were coming back. You cut out for a bit, but continue on.
All right. So, um, you are not a reporter of company. You are just and the your clients. What you are doing is that you are acting in the best interest of the client. So, I won't base my assumption on the management outlook. I base it on what is currently happening in the company, the economy at large. Ensure that my assumption is good story because a good analyst is a good storyteller. So I really learned a lot.
Yes. And how does it either change or support your decision about your future career? Well, I think we got to end it there. Unfortunately, we got a rough internet, but Ibrahim wins the prize for the guy who pushed hardest to get out there with his presentation. We had a lot of technical difficulties, but we resolved them all. And now you've heard the story of MSI. If you want to build a competitive advantage in company valuation, just join me at valuationmasterclass.com.